What is going on, you guys? Happy Wednesday. It's January 26th, just after 11:30 a.m. Eastern Time. I hope you're having a fantastic day. We're going to dive in and talk about some subjects we were really getting into in today's chat in the Discord. And if you guys are not a part of the Discord yet, there should be a link down in the video description. Feel free to join the Discord. It's open for free to the public now. You guys can see what we're all talking about in here. Come on in, say hi, hang out, kick back, see what we're talking about. Keep an eye in the market, see what stocks are popping off and what subjects we're talking about. We're always talking about interesting new stuff here in the chat. And before we dive deeper into this video, I just want to say for members, every single day what we do, Monday through Friday, we jump in, we do a pre-market prep 30 minutes before the market opens, stocks on my watch list, levels to look out for, my thoughts going into the trading day, getting you guys prepared mentally for the trading day. And then also every day we do lessons, midday recaps. What you are about to see in this video is what we pretty much do here every single day. So as a trader here at Trading Learning 101, we're all in here learning lessons together every single day, growing together every day, one day at a time, step by step. If you want to join up, join the community in the Wolf Pack, join the Discord, and I'll see you guys there. Let's jump into the video. So today we were talking about different perspectives in the stock market and really honestly focusing on what draws you in, what catches your interest. And where I want to go with this is there's all different types of trading vehicles in the stock market. You have OTC, pink sheet, penny stocks. You got stocks at $1. You got small cap stocks, mid cap stocks, large cap stocks, options, ETFs, inverse ETFs, indexes, Forex, cryptocurrency, shorting stocks, and the list goes on and on and on and on. We have all of these different trading vehicles available at our disposal. And what I see a lot of people do when they come into this game, they jump from subject to subject to subject, and then they quit. And what I really mean by that is, let's say you're brand new, you jump into the market, and currently the hot theme is, let's say, low float stocks. Stocks like SRRA. It's a low float stock. It's at $20 a share. It's got good range. And you're seeing all of these stocks, $5 to $10, just exploding up, $3, $4 a share. And then things dry up and die off. Well, those stocks ain't running no more. So now you start looking and searching for the next big thing, right? Now you're noticing large cap stocks are starting to pop off, and them stocks are starting to go. Stocks like Facebook. You notice a lot of people are talking about Facebook and it's very volatile. Stocks like Tesla pop up and take off on a run. And you're telling yourself like, man, this is almost $1,000 a share. I can't trade something like this. I only have a couple $1,000 account. So the only way to get involved with this is to learn about options. So now you want to dabble into options and get into that. Then large cap stocks die out. Then again, you start seeing penny stocks pop up and them start to take off and get really hot. You're seeing all of these different themes pop up and go. You're seeing stocks at 50 cents a share pop off, take off, and every day you're seeing all of these stocks near $1, 50 cents pop off and run. All of these different scenarios, trading vehicles pop up, they heat up. It's as the saying goes, the stock market is very trendy. We've seen a lot of trends come and go in our careers. Doesn't matter when you started. I've been doing this for a while. Back when Bitcoin first had its big move, when it made its run up to almost 20,000, all of these stocks were coming out and they were mentioning blockchain or cryptocurrency, and they would skyrocket overnight and be in play. A lot of these companies were coming out and they were changing their name. One of them I remember, Long Island Iced Tea. I forget the ticker symbol, but they came out and they changed their name to Long Island Blockchain. Prices shot up in a few days from $5 a share up to $40 a share. The stock market is very, very trendy, very trendy. You'll learn that the longer you do this. So as we're here every day, guys, we see all of these different cycles pop up. You're going to see low float stocks heat up, and then they're going to die out. And then they're going to heat up again a couple months later, and then they're going to die out. You're going to see all of these different themes pop up. All of these different market cycles pop up. And you got to adjust. You got to learn to adjust to the market conditions. What's going on across the board? Today just happens to be Wednesday. Usually on Wednesdays, once a month, the Feds meet. And on the day the Feds meet, nothing really goes on. The market will open, things will pop off for like maybe the first 30 minutes, and then things will die out because everybody's anticipating and waiting for what the Feds have to say at 2 o'clock. When you're new in the markets and you have a niche that you want to focus on, let's say they're $1 stocks. That's all you're trading, or stocks at $1, $2 a share. That's your niche. But then when they dry up and there's no opportunity there, that's when people start to wander off. They branch out into no man's land, unknown territory. And what happens when you have no experience in something? You're going to fail miserably at it, right? So you got to get that experience under your belt, have an open mind, and see what's all out here. Because we've seen it, you guys. Stocks that are at 50 cents, something like SNDL, this is going to move differently than a stock that's at $20 a share or even $100 a share. All of these different stocks move differently. Take it in levels. $1 stocks are going to move differently than $5 stocks. $5 stocks are going to move differently than $10 stocks. $10 stocks are going to move differently than $50 stocks. And having a mindset like that, these stocks all have their own personality and the way that they like to move. Getting that experience under your belt, seeing these different market conditions. There's so many different scenarios that you have to consider and go through to understand this game, and it all just takes time. And that is where a lot of people, they don't want to put in that time. They want to come in, and let's not kid ourselves, you guys. The first thing on your mind when you first get involved with the stock market and day trading or swing trading is what? Money. We're all here to make money, right? So that's the only thing on our minds when we first start out. We want to get that money. You hear people say you got to have a passion for this. Well, the more you educate yourself about the stock market, and then you start to get into the more deep topics like psychology, emotions, human nature, this is where you start opening up your mind and you start to discover and learn about the market and how the whole world revolves around the stock market. And it only just doesn't stop there. How you perceive the market, who you are as a person, all dictates the type of trader you will be. You'll find it hard that following alerts doesn't work, right? We've all been there too. When I first started out, I would follow Timothy Sykes and I would follow his alerts, even when he told me not to. He said, by all means, do not follow my alerts. What did I do? I followed his alerts because I seen he was making money and I wanted in on that too. So you'll start to follow alerts. It'll work for maybe a moment and then you'll realize man, this isn't working anymore. I'm always last to the party. The guru will alert it, and then I'll lose. They don't know how a trader thinks, right? They don't have no experience. They have no idea what they're getting into. And it's the honest truth, and you can't be stubborn in this game. You can't. You got to have an open mind and adjust to the conditions that change. I left him Sykes, then I went over to Deckmar Trades. Then I started following Deckmar and chasing after low float stocks that he was trading. Sure, I made some money, but ultimately I lost a lot of money because little did I know that trader had a 30-second delay on his stream, or I just had no idea how he was trading it. If a trader all of us have different eyes, right? We all pick up different patterns. We see things differently, all of us. This is one of my favorite topics to always go back to, you guys. We know about chart patterns, right? And this is where I like to think I shine, because I think outside of the box and I want to think differently than everybody else. We all know chart patterns. They're easy chart patterns. We're all taught to look out for these easy chart patterns. And they even have it broken down for us. There are some that will tell you, like this one here, you can't see it that well, but it will tell you, like this one, it'll tell you where to enter in on it, where to put your stop loss, where to put your reward target. We have these easy patterns that are in front of us, but yet 90% of people still fail and lose money in the stock market. Why is that, you guys? Because we all look at things differently. You could have a pattern like this, but you also have to take into consideration what we were just talking about, how volatile your stock is. What prices is it at? A stock like today, for example, SRRA. This stock has ran from $22 up to $26. That's a $4 move to the upside. And it's pretty much a basic chart pattern that a lot of people are taught to look out for. A simple trend line type of pattern. Then you have your U shape going on here. These are easy patterns people are taught to look out for. What they fail to also consider when focusing on these patterns is how volatile the stock is and at what price is it at. As we were just talking about, a $20 stock is going to move a heck of a lot different than a $1 stock. A $1 stock, they're not going to explode up and run $1. If anything, a $1 stock is going to maybe move 5 pennies, 15 pennies at a time. Something like this stock, AVGR. This is at 30 pennies. It's got no volume. This day it ran from 24.5 cents up to 28 cents. That's a 4 penny move. And you're going to see patterns on these charts, just like this one. You got a wedge pattern right here. Then it broke down from the wedge. You got pretty much a double top pattern up here. It broke down. So considering your average true range and the volatility of a stock when determining these patterns, you guys, and it's perfectly normal for new people. I get it. You fail, but you just don't know how to think like this. That's why you really got to educate yourself. Show up every day, educate yourself, see these different market conditions, and really pay attention to the type of trader that you want to become. See, for me, the type of trader that I am, guys, I like to trade stocks that have a low float, and I like to trade stocks between $5 up to $100. My favorite saying, the lower the float, the bigger the rip. So I like trading low float stocks. I see opportunity there. Someone else may not see opportunity there. They may look at low float stocks, they're too risky. I can't trade a low float stock, or I can't sit at my computer the whole trading day to monitor these low float stocks. because this is what could happen with low float stocks. Let's pull up IMTE for example. For example here, and this is just simply because volume dried up on this name and it broke its trend. On the 10-minute, it was trending up from 450s all the way up to a high of 12 over the course of January 5th, all the way up here till January 21st. So about 2 weeks, 2.5 weeks, IMTE trended up right here. And as soon as it broke that trend, this thing crumbled wicked fast. Go back to the 1 minute and look at how quickly this stock crumbled. It was up here at $12 a share, and in a blink of an eye, it fell all the way down to $8, $4 a share. Somebody that's new in the market, they haven't seen anything like this before, they're going to get freaked out, right? Something that falls that fast and that hard. And again, too, that's where your size comes into consideration as well. You have to base your risk or take it into consideration on how volatile the stock is and how much size are you going to use. If something's super volatile like IMTE, maybe you should only trade 25% of your original size to protect your butt from that downside risk. But that's not how new people like to think. They don't think about the risk first. Always put that risk first, you guys. Risk first always. Think about the reward second. That's going to help with your discipline, stock selection, and just because something looks good right now does not mean it's going to be good in the next minute. The fun thing with technical analysis is to have fun with it. Don't take it too seriously, is what I like to say. Have fun with technical analysis and look at it as an art. It's an art form. It's not perfect. We all view things differently. We all have different perspectives. Have fun with it and put together strategies that work for you. And that is where the question comes back again, you guys. Are you here for the money or are you here for a passion? Do you have a passion for this? Real talk, if you have a passion for this, then you shouldn't have to force yourself to break down charts, to study, to improve, to work on yourself. Stay on that grind. You're showing up every day, putting in that screen time. You want to discover everything you can and learn new things. You're watching all of these finance documentaries, audiobooks, books. You're learning all of this trading lingo. You're diving into it head first, and you don't even have to force yourself to get up and study. That is where you have a passion for this. You jump out of bed every morning, excited to run to your computer, fire it up, and look at charts. It's not about the money. And a lot of people fall into this with the money aspect first, and it holds them back from success. You got to learn and train yourself to have fun with this. Don't take it too seriously. Take it one day at a time, you guys, and slowly over time, everything is going to start coming together. It will. Over time, it will come together. You'll start discovering who you are, even though you think you know yourself. You know the type of character that or person you are. Try the stock market. Sit here real time and trade live with real money. And that's why I frown on paper trading. Paper trading, you ain't going to take it seriously. And when you hit that button, you don't have those raw emotions hitting you. Now, if you're trading with live, real money, that's yours. You get that experience, that raw emotion, how you're feeling when you hit that buy button. How are you feeling when in that trade? What are you seeing? What are you focusing on, right? That's where being very observant, learning from your mistakes, your experiences, what makes you comfortable, what makes you uncomfortable. And then that is when you start putting together strategies that you want to focus on. So just because I like to trade low float stocks, stocks between $5 and $100, doesn't mean you'll like it. We've got traders out here that strictly like to trade the indexes and ETFs. So they'll buy options and they'll just simply trade the SPY every day. That's their niche, their trading vehicle. And that's all that matters, you guys, is finding what works for you and sticking with it. Doesn't matter if you're a short seller, you go long, you trade Forex, focus on what you want to focus on. For me, and the type of trader I am, I've dabbled in shorting stocks before, but I've never fully committed to it. Instead of jumping in head first into it, I'll dabble with it, experiment with it. I got to get a feel for it and start putting together strategies that work for me. It all comes down to experience. And as the saying I've said time and time again, you guys, you want to look at yourself as a scientist and a detective. A scientist, and it's kind of like what you, old army guy, what you're doing. You're educating yourself on topics like anchored VWAP and these moving averages, exponential moving averages, and you're experimenting with the different types of moving averages. That's what it's all about. You're having fun with it, and you're putting together strategies that you believe in and that you're seeing with your own eyes work for you. And that, bottom line, that's all that matters. You're the only person that can make money with what you see. Does that make a lot of sense? That's why a lot of people who follow alerts, they join a trading group and they just want to follow what the guru is trading. That's why they ultimately fail. Because I have different perspectives and views at what I'm seeing than somebody else. We just posted a quote in the server, I believe it was a few days ago, and the saying was, if you think it's a bad time to buy right now, somebody else out there thinks it's a good time to be buying. And that resonated with me and stuck with me. So if we look at something like SRRA here, it's clearly been trending up all morning, right? Well, for me, I'm like, I can't get in on this. It just ran up $4 a share, $5 a share nonstop. It needs a retracement and a pullback. Somebody else out there could be saying, hey, this is a great value right now. This is a good buy. I'd be buying here. That's when all stock speculation comes into the picture, you guys. Everybody has an opinion. Everybody sees things differently. That's why you got to focus on you. Once you start realizing that, hey, it doesn't matter what that person thinks. All that matters is what I think. That's when you'll start branching yourself away from what other people think about something, and you'll start trusting in yourself and believing in yourself. And that's when the money will start rolling in, you guys. For real. People make it harder than it really is. And it's all due with time. You got to put that time in. And it will come. And over the course of time, you're going to open up new doors in your mind. You're going to grow. And you're going to look back on yourself when you were new. And you're going to be like, man, I can't believe how simple-minded I was when I first started trading. And how closed off I was. And how I would just believe in these companies and this garbage stocks.